and welcome back to the Crypto Ethic. My name is Tansy Anja, and I am one of two of your usual hosts. So I am usually here hosting the Crypto Ethic with Anja Klaus, but today she's unable to make it. And the episode that we did plan for today, we have decided to release at a later date because there is so much that is going on in the crypto space that we really wanted to come and share that with you. But she's not able to be here today. So it's going to just be me telling you about what's been going on. So, just to give a little introduction to who I am the founder of the Crypto Ethic, which is an organization specializing in teaching about crypto and Bitcoin and helping to offer pieces around self-empowerment, around money, and around our sense of value. So in this video, I really want to talk about what has been going on in the space that is causing a lot of upheaval. And it's not just in the crypto space, but it's in the wider banking space as well. So it all sort of started recently with a bank called Silvergate, which is the main access point for many crypto firms from bringing dollars into crypto and from crypto into dollars. So it offered the TradFi route, so the traditional financial route for crypto companies. So it was a really important player in the space, and 90% of its clients were in crypto, which made it highly exposed. And that is part of the issue. So, due to the collapse of FTX, it had a major impact on Silvergate because Silvergate had funds with FTX or had given them a big loan. And just with a lot of collapses in the crypto space and a lot of price descents, like that's had an impact on Silvergate. So, Silvergate, after experiencing a bank run and experiencing essentially massive holes in its balance sheet, decided to file for bankruptcy and so closed their doors. And there are other banks that service the crypto industry, such as Signature, but these banks are becoming fewer and far between. And so it sort of remains to be seen how many banks are going to be able to service the crypto industry to be able to bring money in and out of the dollars, fiat money in and out. I'm sure that that will always be a coveted medium. I'm sure that someone will always step in to provide that facilitation. But at the moment, it's just we're losing the banks that are offering that. And it's a shame because Silvergate was one of the earliest, if not the first bank to offer services to the crypto industry. And so there's a lot of sadness in the space of just recognizing how this bank went out on a limb and really supported the industry for so long. For it now to be insolvent is sad in that sense. But obviously, there was a lot of risk around its exposure to crypto clients. And the funds that it lent to, for example, FTX, and they were a little bit freer in giving loans when maybe they should have been more cautious. So there was a lot of glee from Elizabeth Warren about Silvergate collapsing because of it servicing the crypto industry. But now what has happened is there has been a bank run on a traditional bank called Silicon Valley Bank, which serviced all of the tech industry. So the majority of Silicon Valley businesses, a lot of the sort of Web 2 businesses. And there was a Silicon Valley Bank arm in the UK, which is also facing, incredible problems. And what's happened is that due to them having a lot of government bonds and due to the interest rate rise by the Fed, they have seen these government bonds basically devalue. So although they get paid interest to hold those government bonds, the actual bond themselves is devaluing over time due to interest rate hikes. Now, what happened is that there was a hole in the SVB, so the Silicon Valley Bank, and as they tried to cover that hole, they sold something around 20 billion in government bonds and lost over $1 billion due to that, due to selling them early and selling them at a loss. So they bought them higher than what they are worth. And that then contributed to a huge amount of insecurity and uncertainty in the general perception of SVB. And it triggered a bank run. Over the weekend, in a very short space of time, Silicon Valley Bank collapsed. And this is huge and significant because they are one of the biggest banks in America, and they are one of the major banks servicing the tech industry. And allowing them to collapse is really creating shockwaves in the banking industry, and people are losing faith in the security of other banks and their loans, essentially, and their government bonds, and like how much they have lost because of interest rates rising. So there have been more bank runs on other banks, and we'll wait to see like which other banks fail. But this is really starts at the interest rate piece. So for a long time, there have been zero interest rates, which means that a lot of tech companies, a lot of people, a lot of like unsubstantiated businesses have been able to take out loans very easily. And what is happening with these interest rate hikes, it is having a really huge impact. So this may just be the beginning of a succession of banks that may fail due to US economic policy, and just for a response to the inflation that happened, basically perpetuated by a huge influx in the creation of more dollars. So imprinting a lot of dollars and pushing a lot of loans into the space through banks. There has been this tremendous amount of available money in the US system, which has led to inflation. And now the ways to try to combat inflation, which is very archaic and undefined tool, is really just in using interest rates, which just pushes up interest rates to try to stop people from spending a lot of money, try to like recoup some of the money and try to bring down this excessive rise in prices. So it's a really blunt tool. And what we are seeing is the use of that tool is contributing to a lot of pressure on the banking sector in general. And it's a really interesting time where we are looking at the economy and nothing feels stable, nothing feels that secure. And although general investors in SVB they have insurance up to, I think it's 250,000, so they will be able to access that money. If you had any more than that in the bank, then that money can be lost. So it's going to have a major impact on tech businesses, on innovation, on companies and their ability to employ people. And so it's going to have a big impact itself on the economy. And what we're seeing is just these centralized spaces. So centralized exchanges such as FTX, and traditional centralized banks like Silvergate and SBV. It just shows that if you hold your money in a place that is owned by somebody else, they can ultimately take your money if they fail. And so it's really imperative to take back control over your money. And the only way to do that truly is through Bitcoin or through gold. It's having a commodity and having it under self-custody. So that's either Bitcoin in your own wallet that you control, or it's gold that you have in your hand. And both of those can be a little bit unliquid or illiquid, because gold can be harder to sell and move on, especially, or like to make smaller payments. And Bitcoin, with the price so fluctuating, it can be difficult to retain the value consistently so that you can utilize that Bitcoin. But in terms of longer term holdings, they are going to be the strongest assets for your personal autonomy over your money, to stop it from being able to be taken through insolvency measures, or through the risky nature of our banking system, or in corrupt individuals at the top of some of these businesses like SBF. So Bitcoin and self-custody wallets are really the answer, as well as perhaps having cash in your bank, but only up to amount that is insured, so that 250,000 limit. So we've really got to use these examples as ways to take back our control and to see why Bitcoin came out of the 2008 financial crisis. And these bank runs and bank collapses are some of the biggest, if not the biggest, that we've seen since that time. And so the same cycle is continuing of this like boom and bust. We're in that bust period. And Bitcoin was created in order to defy this from happening again, so that you could take power of your Bitcoin, your money, so that it didn't matter if any banks collapsed, any centralized exchanges collapsed, or anyone who was being corrupt or manipulating the system. As long as you had control over your Bitcoin, they couldn't access that. It's only the price that then fluctuates. So it's really important to use this situation to reevaluate the type of money that you have, how you hold value, and how much liquid money you need, how much money you need to be more stable, and how much you trust banks and the traditional financial system, because we don't know how far this snowball is going to roll, where it's taking banks down with it. And this isn't just a crypto problem. This is an economic, global economic, but also US economic problem itself. So a lot of people have tried to cast, all of the problems as being crypto related, but now we're starting to see it really impacting the traditional financial space. And so it's clear that it's not just crypto, that there have been some bad actors, but that really financial policy and just the financial system itself is not fit for purpose. And we have to find another way. And that way, the only way that we have at the moment is Bitcoin, until they come out with a central bank digital currency, which would be another version of what we already have. There is no alternative other than something like Bitcoin, other than taking back control over your own money. So just something to consider and think about. So I did want to hop on a video today to talk about that as an important concept about the bank runs. There is also another thing happening at the moment, which is around USDC. And that is a really important piece that everybody should know. So USDC lost its peg over the weekend, which means that it's a stable coin and it should always hold the dollar value. And sometimes it falls just a couple of cents off the dollar. But over the weekend, it came down to, I believe it was 86 cents, which is a huge drop away from its dollar peg where it should always stay. And over the weekend, it has regained close to its full peg again. But the problem is that a stablecoin should never lose its peg. And it did, because there was a run on it, because there was evidence to show that they had a huge amount of dollars held at Silvergate, up to $3 billion. And with that being lost in the Silvergate collapse, that leaves a huge hole in the kind of the collateralization of the stablecoin, which made people then sell their USDC for Bitcoin or dollars. And there was a halt on a lot of exchanges, including Coinbase, where you weren't able to exchange your USDC. And that would be resuming on Monday. But although it's now reclaiming its peg, it's possibly because people haven't been able to exchange it. And any stable coin that basically shuts down is not a good look. It's not a good look that they stopped being able to convert into the dollar. So what will happen on Monday, we don't know, but there is speculation that there will be another run, which means everybody who has USDC, or the majority, will try to exchange it for dollars or USDT, which is another stable coin, or Bitcoin, because they don't want to hold USDC due to the risk that other people could sell it. Because if everybody sells it, then there is ultimately that 3 billion hole. So the final people who haven't sold it will be left with nothing, because the money will be depleted as people spend it. So nobody wants to be that last person. So everybody may choose to sell. And if that starts happening, then it will mark potentially the end of USDC. So this is a huge deal. And it's really important, if you hold USDC, to decide for yourself whether you are going to take the risk and hold it, for it just to be, maybe it's going to be absolutely fine, and it will hold its peg and just carry on as if nothing had happened. Or if people basically panic on Monday and start selling it, then if you've still got hold of it, you could lose all the value of your USDC. So you may want to decide whether you ultimately take the decision to sell it into dollars or another stable coin or Bitcoin. So that's something to consider. So there is a lot of different things at play in the crypto space and the wider space at the moment, and is just a lot happening all at the same time, which is why I've hopped on this video, because I want to share some of this with you all. And the space is moving so quickly, so much is happening, that it's really important to be able to share some of this with you. So I hope that you enjoyed this show, and hopefully we will be back as usual next week, me and Anja together, to discuss all of the other things that are going on in the crypto space, which is huge, to do with Ethereum, securities, as we've talked about last week, but there's much more to cover. And yeah, much, much more. So we will be back next week to delve into all that. But for now, stay well, stay kind, and I look forward to speaking with you soon. And if you enjoy the show, please do consider liking and subscribing to our channel. And if you want to learn more about crypto or Bitcoin, then do head over to our website, thecryptoethic.com, to find out all of the different offerings that we have on at the moment. So I look forward to speaking to you soon.